Tony Sagami, clearly it's been a rough few weeks for stocks. We saw the S&P 500 fall around 7% in September. And you think that the market could move lower, and one way that you are playing that is through the ProShares Ultra Short Industrials ETF. The ticker is SIJ. Now, is this a play on a weakening global economy or just a strengthening U.S. currency?
Well, it's a play on both, but this is an ETF of U.S. industrials, not foreign. But it's a big global economy. And for example, Maersk, the biggest shipping line company in the world, they've moved 15% of the world's cargo. And they've already warned that the global shipping is slowing down. Now, the reason that's important to this is because exports are a pretty good barometer of U.S. factory output. You know, capacity utilization now hit 78%. You know, I think of capacity utilization as kind of the unemployment rate for American factories. And any reading above 80 is pretty good. But below 80 is terrible, maybe like an 8 or 9 or 10% unemployment rate. So that's pretty bad. On top of that, U.S. factory output now is lower than it was before the financial crisis. So there's no rebound. And so if you want to bet against slowing factory output, which I kind of have at my makers and takers theme, and the makers are the factories and the takers are the transportation companies, but it's weakening and getting worse.
All right, well, let's talk about transportation, because another play that you like is shorting the IYT, which is a transportation ETF, or buying puts on it. So it's been moving down, and a lot of people say, well, you got to follow the transports, and you're saying follow them down.
Well, you know, the Dow theory is the old transportation issue, and certainly it has been leading the market lower. And if you look at the chart, it's nothing but a series of lower lows. So you definitely have some problem there. It's not just in you have weakness in shipping companies, trucking, and airports. For example, out of the Port of Long Beach, one of the busiest ports in the U.S., their traffic is down 18% year to date. That's also true on the East Coast. The China Freight Index, which has been tracking the prices that people pay to ship out of China, that's down 22% since its February peak, and it's down 18% from where it first started in 1998. So you have some tremendous pressure on pricing on there. On top of that, you have egregious overcapacity, which is a different story, but we're going back to QE and how it leads to overinvestment and the maintenance of zombie companies that should be dead. So transportation is very, very weak and getting lower.
All right, but we have seen a lot of action in the market. We saw the VIX, the so-called fear index, spike in August above 40, and now it's in the mid-20s. It's come down. You say investors who want to take advantage of this volatility can play the VXX, which is an ETN, not an ETF, but it's similar.
Very close, very similar. Now, the volatility is a different animal. Some people just aren't comfortable with the concept of shorting the market or buying puts. And the VXX is a way to still participate from falling stock prices without actually being physically short. All you really are betting on is that volatility is going to spike. And given the wild swings you've seen in the market, I think that's an acceleration you're going to see. So if you want some haywire insurance, and I think everybody needs a little haywire insurance, especially if you're in the business, VXX is a great way to do that.
And then finally, you recommend the FXP, which is an ultra-short China FTSE 50 ETF. Now, it's 2 times, so there's leverage there. So this can go down a lot, but it also can go against you.
It can go against you, but also is 2 times on the upside, too. You know, the World Bank just today lowered their forecast for China GDP growth for both this year and 2016. You know, and I don't trust any of those numbers that are coming out of China. You know, I think the only politician that's more dishonest than the ones in Washington, D.C. are the ones in Beijing. So don't believe in any of their numbers. Take a look at the companies that are selling into China and listen to their woes. Take a look at Caterpillar, Federal Express. The list goes on and on and on, and they're citing China as a problem. And the Chinese market, is overvalued as it is, still has a long, long ways to fall.
All right, well, thanks a lot, Tony.
Anytime.
All right, and thank you for watching The Street.